Hey everyone, and welcome back to the Oil and Gas Rundown live here at King Operating in wonderful Dallas, Texas. My name is Rachel Griffith. I'm a Senior Vice President here at King Operating. And welcome back to the show today, wherever you're watching from. If you're watching on LinkedIn or YouTube, make sure to subscribe if you're on YouTube, and also drop some comments down below. Let us know where you're viewing from. We would love to hear from you. Or if you're watching on the replay, shoot us a comment, let us know where you are, and also visit us at kingoperating.com so you can learn a little bit more about our company and how we offer oil and gas investment opportunities out there for direct drilling programs. So today on the show, I've got our founder and our CEO, Jay Young, with us today. Hey, Jay.
Hey, how are you doing, Rachel? What's going on with you?
I am doing great.
Good.
Enjoying the temperature inside versus what I see on my screen with a heat warning in effect for the wonderful North Texas area.
I went to dinner last night and it was 109. Went to dinner and it was 109. 109. That is
109.
That's hot.
Woo. That's some warm temperature. So we've also got Aaron, one of our landmen, with us today. Hey Aaron, how are you?
Hi Rachel, doing well. How about yourself?
I'm doing great, thank you. And we got our EVP of Engineering, Kelly Duncan. Hey, Kelly. All right, so Jay, I want to start today by first jumping into taking a look at oil prices back over $85 a barrel, and we still have uncertainty around the Strait of Hormuz. So let's just talk, Jay. What's the market telling you right now? I mean, how much of oil prices are actual geopolitical issues versus supply constraint?
Yeah, it's a great question, great thought, and there's a ton of people out there. I'm still doing 5 to 10 different interviews a week about either TV or radio because people are asking what's going to happen and what does the Strait of Hormuz have to do with my gas tank in Dallas, Texas, or if they're talking about what's going on with the markets these days and what's going to happen and I mean I don't feel like we're at the top. I feel like that we're artificially, prices are down, and they're still at $85 a barrel. But I still feel like they should be higher. I mean, Trump's talking about cutting off the Strait of Hormuz. He's talking about, there's 20% of all oil in the world, not just the United States. The world goes through this place, and there's just so many different disruptions that have been happening over the past or since February, March of this year, with so many bombing and so many different people that have their production ceased. It's either that they can't produce it because they can't transport it, or they're all banged up. I mean, drones and everything has just been so crazy. So I just see a long I don't feel like oil prices really go up and down that much anyway. They do go up, they do go down, but it's a cycle as it's been, and we just keep our head down here and just do the best we can at drilling oil and gas wells for our clients, and we've had some really great success this year, which I'm very, very excited about sharing at another time. But right now, you're asking about oil prices. I feel like they're going to stay here with the midterm elections, and Trump's trying to get the prices down for the midterms, and I somehow agree that he's able to do that. But after we suck out all of our strategic reserves and he does everything possible, I think it's going to be like a yo-yo, and it's going to go right back up after the midterms this year. And I believe we're going to have higher oil and gas prices. Our investors are going to be very, very happy.
Yeah, absolutely. I mean, what do you think, Jay? I know a lot of the U.S. refineries are working very hard, running very hard. We have, of course, looking at the exports going out of the Gulf. What do you think this really means for domestic production, the importance of continued U.S. drilling currently and for the future?
Yeah. Well, rig count's up. It's been up here lately. January, February, or I guess December, January last year, this year, when oil prices were at $55 a barrel, and gasoline was less than $2, I was saying now's the time to buy. Now's the time to buy because you need to buy it, buy low, sell high, right? As that's economics, and that's what we need to do. Before the war, and the reason why is because when people quit drilling, it softens our supply, and when supply goes down and the need or the demand for oil is at the same pace or it continues to go up, and it sucks up all our supply, then we're going to see higher prices. We've seen that here lately. And like I said, I felt they were going to go up in the second quarter anyway. Now we're into the third, and it's like we're going to see some really high prices, at the end of this year, because I do feel like that the rigs are not over. Wells decline. Oil wells decline, and it's kind of like, Exxon. Exxon's a $400 billion company. They have $400 billion. They decline out every year. So they're losing $40 billion worth of reserves every year. So they got to make that back. Well, the only way to make that back is by drilling wells in good areas, which they drill, wells out in the Permian, never hit a dry hole. It's the Permian. It's an unconventional reservoir. They have a lot of rigs running, probably 25, 35 rigs running out there. But they also need to reclaim or find other means to replace those barrels that they've lost. And so they're starting to drill a lot now, and they're starting to take over because of their supply. So you see ups and downs with supply and demand, and it's just going to go in a cycle. It goes in cycles. It has for years. People are like, oh my gosh, oil price. I was like, hey, it's going to go up. It's going to go down. It's not a question of whether, I'm fourth generation. I've been around this business for a long time. Yes, sometimes we've had some really bad cases of the, big, huge spikes or whatever. Now you're not going to see it. You're going to see prices, unless they go up a lot first of the year or into this year, first of the year, you'll see $120 a barrel. Be a big spike there just because, like I said, the first person that blinks loses, and right now with all the different supply and demand around the world, you're seeing demand continue to increase, and you're seeing the supply being disrupted all around the world. And oil is a global commodity, so if the price is down overseas, or if there is a shortage overseas, it's going to affect oil price here in the United States. So I don't. It's going to go up and down. What can I say, Rachel? You know what I'm saying? It's like it's just going to happen. Yep. And maybe some ways are bigger than others, but look over time, and now's a great time to invest in oil and gas. I really feel that. People want tax write-offs. Do you want a tax write-off, or do you want a good investment, or do you want both? And we have both of them, and we're excited about the opportunity and the assets that we have right now with the team we built. So
yeah,
just excited.
Absolutely. It's oil and gas prices, commodity prices, definitely cyclical, but one thing is always sure and steady, and that is the demand for energy across the globe and in this country. So it is absolutely a good investment when you are looking for something that is going to not just produce revenue, but create a tax deduction and some great overall long-term growth. So Kelly, let's talk about rig count. Jay mentioned it. It's climbed lately. I want you to just talk a little bit about what you're seeing in the field, and how does rig count kind of affect, other parts of the industry, as far as even, we're looking at service costs, scheduling, those types of things.
Yes, Rachel. Rig count definitely is the biggest measure we kind of compare activity levels with. We're up 50 or so rigs in about last year, but really based on commodity changes and uncertainty and all that stuff, it still seems like not a very high number from where we were down from, over the years before that. So it's affected drilling availability not too much. We're picking up a second rig here shortly, and got 6 rigs I'm looking at right now, and all but one of them will fit exactly in my schedule. And the other one, I'm only going to miss my planned starting window by 2 weeks. So there's still plenty of availability. Definitely, you also mentioned it here, frac crews and frac pricing are probably affected by more. Lot of rig iron stacked out there and a lot of available rigs. Frac crews, that's got a little tighter, and I have to spend a little more time focusing on frac scheduling and coordinating and trying to package my wells together for a regional efficiency and availability. So definitely a challenge there. With the Strait of Hormuz closed, or open, close, international commodities like pipe are also a challenge these days. So we have to plan ahead, a little more lead time on our casing availability for anything coming from overseas. So that's affected as well. And again, with the fluctuating oil prices comes fluctuating fuel prices, and then all the things that come in supply and demand with that. So we see some cost increases. A lot of that comes from fuel surcharges and whatnot. But all in all, I can get equipment in under 30 days notice in just about every level. So it's made it a little tougher than it was a year ago, which doesn't actually hurt my feelings a little bit, gives a little bit of breath of some wind to the sails to our operations and our U.S. domestic oil development in general. So
Kelly, just to clarify what you're saying, so you said you're picking up rigs to drill, not a problem, but there is more of a demand for the frac crew. There's a little bit of a lag there for frac crews.
A year ago, when we fracked a few wells, I was able to just pretty much pull a frac crew out, get whoever I wanted when I wanted. I just have to do a little more planning and squeeze myself in tighter schedules than I was a year ago. So yes, frac utilization, which is a little harder to measure, but I can tell just from the industry and just talking to the 4 or 5 vendors we discuss with all the time that I've definitely got to keep my options open on who's available when I need them, and work a little tighter with the ones that I do contract ourselves with, just to make sure that we fit inside of people's windows and schedules.
Now, why is that? I guess is what I kind of want viewers to understand. Is it that there's actually less frac crews out there available, or?
Yeah, not less crews, but so one of the common techniques, a lot of people kept drilling rigs running because of contracts with drilling rig contractors or with lease obligations, which Aaron can talk about as well here in a minute. So a lot of times people keep rigs running, but in the modern horizontal shale play and non-unconventional operations, drilling costs are less than half the cost of a well these days. So let's say you've got an $8 million D&C well, probably $3 million of that is drilling and $5 million that's completion. So if a company in, let's say, late 23, 24, and 25 knew they had lease obligations, knew they had drilling requirements, knew they could get a good price on a drilling rig contract by going long term. So they kept their drilling rig program going, but their budgets got tightened up a little bit. And so one of the places you can cut is to drill wells, and if your leases allow it, is to duck them. That's the word, drilled uncompleted. So we call that a duck. You'll hear that term throughout industry and really on Wall Street all the time. So over the last 3 years, duck count has gone up a lot. A lot of drilled wells that were uncompleted. And, a well sits ducked. There's no real harm to the formation or anything like that. So it can sit there, kind of poised and ready. And when prices jump up like they do right now, from 65 to 85, now's the time to go. And that's one of the reasons we're seeing frac utilization up. It's not there's less horsepower and crews available, but utilization's up. So even if rigs have only gone up 10%, but those several hundred to thousand ducks that are out there in the market, now's the time to go get those wells online, because back to Jay's supply and demand, price of your commodity you're selling goes up, you want to increase your production levels. So that's one of the reasons right now that people had, let's say, smaller operators had 610, bigger operators had 60, 100 wells ducked, and that's now's the time. When the prices jump up, you can cycle time. For the minute you start spending capital on a completion only to get a well online can be sometimes as simple as 30 days. So so if you can see, none of us can see the crystal ball, the long-term production commodity prices right now, but we definitely can see the ups and downs now. So if you can drill a well at $60 oil and turn it on at $80 oil, well, there's some value in capital in versus capital out on that. I think that's what you're seeing right now with frac crew utilization.
Okay, there we go. Now I got it for Kelly in the layman's terms for all of us out there who are getting what you were saying, but really I'm wondering, well, why exactly is that? So that actually makes a lot of sense. They can drill these wells and duck them. You're saying duck like DUC?
Yep,
K.
DUC. No K in there, but yeah.
All capital
DUC,
letters.
like frack. Hold off on the
Drilling,
K.
drilled but
Nope.
uncompleted. Yes, drilled, uncompleted. And
Drilled
I'll
and
be honest with you,
uncompleted.
let's say 15 years ago, that wasn't a term that I even knew. I was in a meeting one time with some finance people, and they kept using it. I had to look around the room, and when we got out, I was afraid to ask anybody. I walked out and said to our finance guy, I said, "What is a duck?" I mean, I know what a duck is. I'm a duck hunter, but I was like, "What's a duck in this term?" He goes, "You don't know that word?" I said, "Well, where I came from at the time, we were pushed or challenged to turn up frack our wells immediately. But that was back in $90 oil prices, so turnaround was quick. So I made a large part of my career in development mode, 6, 7 drilling rigs, 2 or 3 frack crews. Jay talks about that often, and so we just boom, 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 got on the conveyor belt and cycle time from stake to spud to frack to flowback to first sales I was measured for a long time in my career in by keeping that number short. But as commodity prices swing like they do now and drop, that's when the word duck. So I was kind of late to the table just because the operations I was in at the time did not call for ducking wells, so I didn't use that term.
Got it. No, that's very good, Kelly. Makes a lot of sense, actually. Duck them and then frack them later. I got it. All right, Aaron, let's switch over to you now. I know, Aaron, you've been a busy man in the office, and you have put together some great lease acreage in a pretty amazing amount of time, to be honest, for King Operating up in Ochiltree County. I want you to kind of walk me through what that has been like for you from the start. I know you've been working with a lot of families up there, a lot of different people where you're putting this lease acreage together. I want you to kind of give everybody the starting point, what that kind of looks like as you go through that process, and then actually getting that finalized, because you've put together thousands of acres in Ochiltree County for us to be drilling. So just kind of lay that out for everyone.
Sure, Rachel. As a landman, I wear many different hats, and before we drill a well, we perform a series of legal, financial, and operational tasks. And kind of what that starts off with is securing the mineral rights and obtaining the leases. And how we go about doing that is landman. We research the courthouse records. We use online databases to trace the chain of title. We're trying to ascertain who owns these minerals. We'll review deeds, wills, probate records, other conveyances, and we create what is called a run sheet. A lot of times it goes back to like 1915 or whenever they really started producing oil in that area. So it's a lengthy process. But once ownership is confirmed, and you know who that is, who you need to talk to, we have to acquire the oil and gas lease. And so we'll negotiate the mineral leases with each owner. Now, sometimes that could be 1 or 2 owners. Other times it could be 100. So, you just really never know what you're getting into when you start running the title. And we have a series of conversations with these owners. Those typically include kind of our intentions of drilling, the terms that we're offering, and also, just kind of the timing of getting these leases signed. Because once we get those leases signed, then we need to get those to the courthouse in the county we're drilling the well to record the leases. So that's one phase of it. But once we have that title work, we submit it to an attorney to obtain a drilling title opinion. Usually once they've had a chance to look at it, they find a series of defects, which then the landman has to start curing the defects. And that could be anything from just kind of unresolved title issues, maybe a bad legal description in a previous assignment. There's a lot of different things that can happen, but it's really crucial because unresolved title issues, those can lead to lawsuits and delays. And as you know, we don't have time for that stuff at King. We got to get in there, we got to drill some wells. So, those are just kind of the things that go into it in preparation for drill before we even get to the point where we're drilling. So we prove the ownership, we secure the leases, we fix the title defects, and we even start prepare for revenue sharing. We've already started determining, who are we going to have to pay out. So these are all the things that kind of have to happen, and that kind of goes into at that point, I'm talking to Kelly, I'm talking to the ops team about what we need to do next, our next steps. So that's a lot of that is just facilitating a few basic things that can help Kelly do what he needs to do. And at the same time, the whole time, from the very first phone call to these mineral owners, we're fostering a relationship, because hopefully we're going to drill a good well that produces for many, many years. And we got to keep up that relationship that whole time. So that just kind of goes into a little bit of it, but that's kind of leading up to where I start working with Kelly, and where I really start kind of, talking with Kelly about things is, hey, we got these lands, and I know Kelly's going to need to get this permit filed, so we got to get a survey crew out there to survey the lands. And at that point, Kelly and I are talking to a lot of different things about, where does the surface pad need to be? And then it usually isn't too long after that where Kelly's like, well, what about water? Do they have good water on that track? And that kind of goes back to fostering those relationships, because in Ochiltree County, that's an area where there's a lot of farmers. And unfortunately, they've been going through a lot of drought, times of drought. And so securing that water source has kind of been something I really had to work closely with Kelly to make sure that he has the water for the drilling, but also the water for the frack. And, that's something I've learned that is, I didn't realize, how much water it takes to frack these wells. And so, this
an incredible amount of water. I know we talked about that, I think last time, Kelly, with Ryan, we talked a little bit about all of the water situation. And I know Kelly has a bunch of swimming pools out there now that he has loaded up with water. Okay, they're not really swimming pools, but they are huge looking like swimming pool. How big are they? How much water do they hold, Kelly? You're muted, I think, Kelly.
You're muted.
No. They're 80,000. Sorry about that. They're 80,000 barrel tanks. So yeah, we had I had three tanks. I think we've seen a picture floating around where there's three tanks out there, and that was about 70% of one frac job right there. So I kind of have to anticipate how much water we are producing out of water wells at the same time. So I don't need 100+%, but I need something more than 50, because my burn rate is pretty fast. I'm actually really proud of my field team right now. Even on single well ops, we're getting eight stages a day, and that's a lot of water in one day. So I can suck one of those swim pools down in about a day and a half if I don't fill it back up. So 3 of them on about a 7-day job. I keep filling them 24/7. We fill it a lot less ratio than we spend it, but the nice part is I'm fracking 12 to 16 hours a day, not 24. If I was fracking 24 hours a day, I'd have to add 50% more water storage. And water is expensive, and water storage is expensive as well. So, in some of this remote operation we're doing, the reason I use swimming pools instead of permanent, we call them duck ponds or frack ponds, is because just that. We have 2 wells in the area, and then we're not going to do anything right there for a long time. It's a lot cheaper to rent those giant above ground redneck swimming pools on steroids and use them, and then get them released, and then bring them back when I need them in the future.
Have a party afterwards.
Permanent.
Yeah. Aaron, I'm just curious, one thing that kind of came to my mind when you're working in these areas where it is a little bit more farmland and agricultural, and there's families out there, just curious, once you start kind of acquiring land and you're talking to landowners, do you ever get like calls from other landowners in the area? Like, hey, do you want to check out my property?
Well, it's interesting you're bringing that up, Rachel, because we discussed that in our ops meeting today. It does happen, especially after you drill 5 wells in a 5-month period. Just in the last week, I've received at least 3 different calls from farmers. One of them was a brother of another guy that we had leased, and they're just rattling off all these other tracts that they own wells in. And of course, that's nice, but there's so much that goes to it. Lots of times when you do a little more digging into their tracts, well, they already have a producing well there, or they, it's just, but yeah, it is absolutely true. I'm getting all kinds of phone calls, but to me, that goes back to the importance of facilitating the relationships in that area, which we've been really good at. My crew of landmen that work out there, they have 10, 15 years of experience just in that area. And so to me, that's a big part of our success out there right now is the the speed in which we're able to get the work done, but a lot of it is because our local relationships that are already in place. So
yeah, no, that's amazing. I was just sitting there thinking like, dang, I mean, if I own some land out there, I'd be like, hey, Aaron, you want to come take a look at my
oh
land?
yeah,
So
it's definitely happening.
that's awesome. I'm gonna, Kelly, just give us a quick update on what the wells are doing, kind of where we're at, production wise for people watching, and then gonna jump back over to Jay real quick.
We are blowing and going operationally right now. Had a little slow spot today, just come in between things, but you'd asked me 3 days ago, I had 5 operations going on at once. So Aaron and the team are staking and getting ready to start building location for me on our Bivens project for our pad 3. So I'm busy trying to scope. That's the rig I was talking about earlier, scoping for that. We still have our drill rig going to Midcon on well number 5 now. We're out in the intermediate hole on that well. Had a frac crew going on, and we're on the 4th frac job out there now. So had several wells running tubing and gas lift on to get them kicked off, and I've had a remedial workover. So it's been go 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 go. I know when I feed Laura the information for our weekly 2-minute drills, I ran out of room on my template the other day. We had so much going on. So the last 60 days has definitely been, in my 5+ years at King, has been the busiest single month or 2 that I've had, which is a great thing. We're just finally, all of Jay's hard work and the team's hard work over the years is culminating on a lot of projects coming together at the same time. So really fixing to be a really exciting time at King, because we're going to turn a lot of wells on in a very short period of time. So there'll be a big boost in production real shortly here at the end of the 3rd quarter.
Awesome. Thank you, Kelly. All right, Jay. Like Kelly said, big boost, lots of things happening. It's hot outside. It's hot in King. We're getting rolling here. Tell me real quick, Jay, we've got a couple minutes. What are you most excited about right now in our current opportunity at King Operating? I got a lot of things. Okay, you can say more than one.
Well, I can say 5 or 10. I mean, Rachel, you being the host of this show is one of them. I mean, there's just no question about that. But the second thing is people talk about, well, you're drilling wells, and I was in New York and I was talking to this guy, and he goes, yeah, but you guys drill dry holes. You guys drill wells that don't produce. And I'm like, where do you get that information? I'm like, we're drilling our 5th well right now. We're on our 4th completion. We'll move to the 5th. We're completing every well we drill, and every one of them has $500,000 to $1 million in revenue behind it. So every time we complete a well, it's not only exciting seeing because it takes a lot of work. I mean, it takes a lot of equity to spend the kind of money that we've spent over the last, and we're going to spend between now and then. We'll spend $100 million between now and end of the year. I mean, that's not, you can't call a couple of investors and get a couple of guys to put in 20 grand or something. I mean, this is some big time cash, and because it's for the betterment of the fund, and it's because this is where the clients need to be. They need to be investing in these, because this is where oil and gas is today. Write-offs, monthly income while we scale it. But I'm excited because we're in great areas like the Bivens, and I'm excited about the team. Probably more excited than the team I am, or the assets. I'm excited about the team we have. I mean, they're going to re-inject the gas, and the Bivens wells will increase production 3-4-fold, 3-4x, just because of re-injecting gas. We should be at 2,000-3,000 barrels a day on the Bivens Ranch alone after fracking this next well, and we'll be at 2,000-3,000 barrels on the Midcon assets that we have right now. So we'll be at 4,000 to 5,000 barrels a day between now and the end of the year, and we hadn't finished. We're drilling 2 more Bivens wells, and we're drilling another half a dozen Midcon wells this year, or trying to get that many in this year between now and the end of the year. So it's like we're not stopping. We're continuing on our success, our model. The KOPX, it's like the difference between you investing. I have this client I went to see, and he's an old oil and gas guy, and he said, hey, just send me the AFE. If I take 10%, I'll write you a check for my 10%. That's it. And I said, well, what do you mean by that? And he said, well, I know how much it costs, and I'll pay it, and send me a bill for my expenses every month. Send me my revenue checks. And I said, okay. I said, why don't you do one of our funds? Why don't you invest in a fund? And he goes, what do you mean? And I said, well, I'm doing the same thing private equity did years ago. They put it all together, they leverage it, they get it up there, then they sell it. I said, after 3 years, your return will be 3x, 5x more than if you just invested in oil and gas. So, hey, not only drilling wells in a good area is worth money, but it's also worth money if you know how to leverage it, if you know how to get into an area and use I don't say common sense, but use some principles that people around the country, I mean, teachers' funds, retirement funds, all these people are investing in oil and gas. The way that we are putting our model together, that's the biggest difference. How we put our model together, and teachers' funds do it all day long. They invest it all day long, and they don't use the write-offs. Just think about that. Just put 100% write-off on that and some more write-offs on that. Just think about how great the returns are going to be. So I guess I'm excited about the team. I'm excited about the assets. I'm excited about the strategy that we have right now and how we're utilizing our money. We're investing as well alongside you. And I'm excited about the investment dollars that you and your clients are putting in. And what we're just now beginning. We are really just beginning on establishing a really great asset, great returns for you and your clients, and I'm excited about that.
Yeah. Oh, I mean, oil and gas already is a very, it's an unusual investment, and I love that because it's already kind of unusual, and yet King Operating makes it really unique. And it's the fact that as an investor, you can actually own real assets that are providing you with income and a tax deduction. But ultimately, when those assets are sold, now you see that capital appreciation. And so really coupling those three things is what we focus on here at King Operating for our investors. So if you want to learn more about how we do that at King Operating, offering you those three core values, then definitely go to kingoperating.com, fill out the learn more at the bottom of King Operating, and we'll be happy to get in touch with you, send you Jay's book, The Upside of Oil and Gas Investing. Second edition coming out very soon. So if you would like that, make sure to go to the website. We'll be happy to send you one out, published by Forbes Books. And yeah, Jay, second edition coming soon.
I know, 30th anniversary. We're coming out with the second edition of The Upside of Oil and Gas Investing. I've got some chapters I wanted to add in there. And so instead of writing a brand new book, I just thought I'd add them in there and come out with the second edition.
That's right. All right. So if you'd like to get a copy of that, make sure to go to our website. We'd be happy to send you one out. And make sure to join us again, same time next week live. We would love to see you then. Thank you, gentlemen, for joining me today.
Thank you for having us, Rachel. Appreciate it.
All right.
Thanks, everybody.
Everybody, stay cool out there. Stay safe.